Hey everyone, welcome to another episode of AdMail. This is Bergman, founder and CEO of IRA Financial. I'm here to help you find the answers to the most frequently asked questions from my clients about self-directed retirement accounts. If you want to learn more, you can subscribe to our YouTube channel and follow us on social media. Just search IRA Financial. Everyone, and welcome to another episode of AdMail. I'm Adam Bergman, tax attorney, founder of IRA Financial, and on today's episode is from Twitter. The first question is about if I make an after-tax IRA contribution, how long do I have to wait until I do a backdoor Roth conversion? So, really good question. And why I wanted to present this question, because I have probably have hundreds of questions in queue, but I actually chose this one with my producer because it's timely, right? IRA contributions for 2015 need to be 2021 need to be made by April 18th, 2022. So anyone who makes more than $208,000 in 2021, not able to do a Roth IRA. So the way to do it is something called a backdoor Roth IRA, which allows you to make an after-tax contribution and then simply convert to Roth. Now, a couple things you need to be careful. Number one, if you have other pre-tax IRA accounts out there, the amount you contribute, or the amount I should say you convert, may not all be able to be converted to Roth. There is a pro rata formula. For example, if you had a $5,000 pre-tax IRA a couple of years ago, and now you want to do a backdoor Roth IRA of $5,000, there's a pro rata formula that says you take the 5, you add the 5 you had previously, that's 10. You divide the 5 by the 10, basically 50% of the $5,000 you're going to convert could be Roth. The rest will stay after tax until ultimately all the pre-tax goes away. So that's the first thing to keep in mind. The second is, what about timing? Can you literally just do it the next second? Is that potentially a step transaction? Is that going to potentially violate some sort of IRS rule? The answer is no. Honestly, you can do it the next second. What we do for clients is we will basically just open up 2 accounts and just do a quick conversion. We'll only charge for 1 account. Since 2010, when the conversion rules, the income rules for conversions were eliminated. Prior to 2010, if you made above a certain amount of money, approximately 100 or so thousand, you weren't able to do a Roth conversion. Now, we remember what happened back in 2010. Financial crisis, Treasury needed money. Conversions are a great way to get quick tax revenue. So they loosened those rules and said basically anyone could do it. And what happened is over the last 10, 11 years, real Roth conversions have become super popular. Now, remember the Build Back Better Act, which has not become law, tried to eliminate backdoor Roths, mega backdoor Roths, and sought to eliminate Roth conversions over a certain income threshold starting in 2031. That bill is no longer, it never became law. We'll see if it comes back to life, but right now it is not law. So yes, you can still do backdoor Roth conversions. You can literally do it the next second, the next day. You want to do it quick because you don't want any earnings to materialize off your after-tax contribution. Why? Because earnings on after-tax contributions are subject to tax. So if you convert those earnings, you're going to pay tax on the earnings. Whereas if you just dump $5,000 into an account and convert it the next day or a week after, without investing those funds, without those funds collecting any interest or generating any interest, there would be no tax. Okay, so there are no time rules. So it's a really good question. Thanks for listening to the podcast. If you're watching on YouTube, appreciate it. And come back for more. Talk to everyone again next week. Take care of yourself and be well.